guys, are you someone that is maybe a little bit fearful once you are kind of waiting for the market to fill your orders, or once the market fills your actual orders, worried about the market is going to hit your profit target quick enough, or whatever the case is, without it coming back against you? So we'll talk about that, about the market filling orders, maybe not filling your orders fast enough, and is there a level of fear that steps in or enter in, psychologically speaking, that you start to be kind of overtaken with or overcome with once you're into a trade and it's not moving quick enough. So sit back, we'll talk about that, because I did receive a comment from an individual on the channel, and I want to kind of address that and talk about that this morning. And so just stay tuned, watch the intro, and we'll jump right into that video. So I want to go ahead and answer this individual's question, and hopefully they're a subscriber here on the channel. If you're not, and you are the individual that's watching the video today, this question that I'm answering hopefully hits home to you, and hopefully it answers your question the best way I know how to answer your question, centered around having a level of fear or fear setting in, whether it's you're anticipating the market to fill a certain amount of orders, or maybe it filled half of your orders, and now you're waiting for a price to move quick enough to hit your profit target area, whatever the case is, and waiting on that to actually happen. Nobody knows, but let's go ahead and jump into the question, because I want to kind of talk about that. And the question is it sufficient for retail traders to trade with 2 or 3 or 4 or 5 contracts without being afraid to not being able to fill our orders quickly enough at good prices? Okay, so look, first and foremost, you have to know, regardless of, before you even enter a trade, what the market is actually doing. I always talk about this. What is the market trying to accomplish? And I always talk about, 2 of the biggest core pieces or elements to trading is being able to understand market structure and follow price action, okay? And that we have to be able to read the market to allow us to depict and determine which way, as far as direction, we're looking to actually trade. All right. Now, yes, there are areas of liquidity that are resting in the market. We know that there's money sitting there, and it is the market makers, it is the market's goal to create those areas of liquidity, okay, in a sense, to set traders or trap traders in a sense, okay? So the market makers or banks, institutions, they will allow areas of liquidity to be rested in the market. They'll create areas of liquidity, and then they'll move the market away from that area, and then they'll come back and capture those areas of liquidity. And the reason why is because they know at certain price points where areas of liquidity are created at, some people will buy at certain areas, and some people will sell at certain areas. They'll move the market away from those areas, and then they'll go back and capture or trade in the direction of liquidity to stop traders out. That's just the way the market makers move. They do that to create and then capture or stop traders out. So you have to understand what the market is trying to accomplish as it is, as you're following price action and reading price movement. So here's what I want to say about that. As retail traders, we want to trade with the big boys. We want to trade with the banks and institutions. We want to trade and follow their footsteps, okay? Not against them. Because when you go against the grain, you're going to be stopped out. You're going to suffer. You may take major drawdown, whatever the case is. You're going to lose money in the end, all right? So first and foremost, you have to have what? A solid strategy. You have to have the confidence in yourself to know what the market is trying to accomplish. And you have to wait on those right setups, those setups. I trade supply and demand. So I'm looking for areas to trade at, at premium price points or premium price levels in the direction. So price pulls back to an area of supply and demand. And once it gets there, I look for, what am I doing now? Looking for a failure or rejection to trade in the direction to move towards liquidity. The same type move of what the market makers are going to do, okay? They're leaving behind, setting up traps for retail traders in a sense, where they're setting up liquidity areas or liquidity zones, or price points, whatever the case is. It could be a major area of support, major area of resistance. They're setting up key areas, basically like dropping a bag, dropping money right there, moving away, setting a trap. They're going to come back and collect it at some point. Maybe not immediately, but it is our goal as retail traders, regardless of the strategy you use, I trade supply and demand. So I'm looking for price to pull back to a premium price point. So when I'm looking to trade, if I'm going short, taking a short entry, whatever the case is, I'm looking to buy with prices at a higher price point okay? At an area of supply, okay? And then when I see the rejection, I take it back towards the area of liquidity that's resting below, could be an area of support, and vice versa if I'm going long, okay? So strategically speaking, you have to have a great strategy that boosts your confidence in knowing, waiting for that price, that right setup. You may trade different setups, and I'm not sure. It depends on the person and their trading style. But it's all about being able to have confidence, all about knowing what the market is really trying to accomplish and getting in at those premium price points and moving in the direction wherever liquidity is resting at. Moving with the market makers, moving with the banks, moving with the institutions, moving with the big boys, moving with the big money in the market to be able to drive, it's like you want to play the game with them. You want to be able to say, hey, they know they want to stop traders out to collect that money at those areas of liquidity. So move with them, okay? That's the key. Now, as far as the fear piece, once you get into a trade, I sit back and I wait for a zone, supply zone, demand zone. It doesn't really matter. Once I see the rejection at a key area, whatever the case is, so I'm trying to sell high, buy low, right? All right, that's the key. Buy at a premium price point where prices are lower. Sell at a premium price point where prices are higher. That's what they do, okay? And then they're going to, again, move in the direction where money is resting there. So what the fear piece, we all, as beginner traders, I'm going to say this. As new traders, we're more fearful then because we are just starting out and trying to start something, to navigate our way, to create a path, to open up the door. We're taking that journey to becoming great traders or successful traders. And it's a struggle. We all know that. I know that better than probably most because I am self-taught and I have spent many years, many hours of studying, practicing, practicing. It's a cycle over and over and over, and I'm still doing that to this day. Going back and looking at charts, we never stop educating ourselves. But getting back to the fear piece, it's hard to tell someone, how to eliminate or alleviate the fear piece because it's all driven around someone's personality. You can't tell a person how to do away with fear. Even to this day, do I have some level of fear? Of course I do. It's just fearful when you're actually trading because you're dealing with money. You're dealing with capital. No one wants to lose money. And it's a business. It's a business model that we try to strategically manage each and every day. With trade management, risk management, and our goal is to be able to make money. Am I as fearful as I was when I was beginning? No. Am I as fearful now trading, or like right now, I can trade a lot of contracts or whatever, lot sizes. It doesn't really matter. But to me, as part of my trading plan, I choose to trade a smaller lot size, whatever the case is, because to me, it's all about, I guess. So as I started from the beginning, part of my plan was to capitalize on smaller gains and build up an account versus allowing it just to kind of myself to sit in the market for hours on end, waiting for price once I got into the market to hit a certain price level where I could take profit at. I'm not. That's not my aim. That's not my goal. That's not my the game I play at hand. I'm looking to capitalize on small scalp movements, whatever the case is, and take my money, put it in my account, build my account that way. So taking small gains and building an account. Yes, you can leverage up and you can trade more contracts. And a lot of people may get a little bit more fearful when they start increasing their lot sizes. But if you're starting to fear, regardless of the amount of lot sizes you're trading, so let's say you're trading 1 and now you're up to trading 2 and 3. Well, you shouldn't have fear stepping up. You should be ready to step up or ready to leverage your account or leverage money into the market. Because you built your capital. You built your account up and now you have a certain size. So most people would always say, and I think I touched on this in the video yesterday, as your account continues to grow, you may want to start leveraging up. But, telling someone how much money they need to have in their account per contract or lot size to be able to trade depending on the market, that's up to you, But going back to the fear piece, yes, it is fearful. The more lot sizes, the more contract sizes that you actually put on, you're going to, there's going to be probably a little bit more fear than it could be. But again, I think that just all depends on the actual person. you know, the trading style, the strategy, the trading plan, how much capital they have to trade with. It just depends on the person. You know, you can't tell a trader or explain to a trader basically, you know, how to trade with their own money, how much money they should leverage in the market. You can give them a suggestion or recommendation how much money they may possibly want to save or put away to put in their account. But again, fear is something that we all deal with when it comes to trading. Do I get fearful when I get into a trade? I want to say, I don't know if it's fear anymore. I think it's just a matter of once I get in at a premium price point or price level, whatever the case is, and the market doesn't move quick enough, I don't think I can start getting fearful. It's just the fact is, I think the logical side to me starts to step in. And so fear, I've kind of dealt with and done away with a long time ago. And we all face certain psychological points or certain psychological barriers, I should say, when we're trying to overcome and, you know, moving down that path to become great traders, whatever the case is. But fear I did away with a long time ago. So I'm not fearful as far as the amount of lot sizes that I trade today, you know, because I still trade, you know, 2 or 3 contracts, which I'm comfortable with, and I've been trading that for years now. I could step up that 10 times or more, or whatever the case is, but I just choose not to. I'm all about making small, you know, taking my profits. I take, you know, several trades a day, and I have a goal, what I'm trying to reach on a daily basis. And to me, I believe in life, you should, even as a trader, you should have set goals of what you're looking to achieve. I'm not greedy, so I'll say, hey, I need, or I want to accomplish this, a certain amount of ticks per day or points, and move on to the next day. And that's my goal, regardless of the size, you know, contracts that I trade. Some trades may not stand out, or certain areas of the market or certain zones may not stand out to be as, I guess, highly, I say liquid in a sense, meaning that they may not be the best price points for me to enter the market at, and there may not be enough area for me to really capitalize on a move. Again, I'm a scalper, so I'm in and out the market pretty quick. So I may just, you know, scale down to 1 contract, whatever the case is. Sometimes I'll bump up in certain situations 3 contracts, or maybe even 4 contracts, depending on you know, the price, the area itself, what I'm looking to trade from once I get that clear rejection. But from that point there, what I want to say is, I know I'm kind of getting off topic a little bit. No one really knows how quick once let's say the market fills your orders. All right, let's say it fills half your orders. Okay, and it doesn't come back in and fill all your orders. Sometimes that does happen. You know, it may hit your price point and what you're trying to get into the market at. You've got, say, I don't know, 3 contracts there. It fills 2 contracts, at least one contract still waiting, or whatever the case is, and then it moves away from that area. That happens, whatever the case is. But in a point at where the market, say for instance, you get into a trade, it fills your orders, and it doesn't move quick enough to your profit target area. Say for instance, for me, I'm gonna tell you how I handle that situation, and I say this in many videos. I'm into a trade. It fills my orders. It's not moving quick enough in my direction. Guys, what do? I get out the trade. Because to me, if it starts kind of piddling around, moving sideways, once I'm into the market and there's no momentum push behind, or no momentum or force behind it, then I get another trade. Because the market at that point, I'm not going to allow the market to come back against me. I just feel like when I'm into a trade, it doesn't move quick enough in my direction. I just get out the trade. I wait for the momentum to kind of start pumping up in the market. Then I'll get back into the trade in that same direction again. That's the way I handle it. That's how in a sense, how I manage when it comes to risk management as well, to where I don't sit back and allow the market to come back against me. I quickly get out, wait for the momentum to step in, especially if I'm at an area which is a premium price point or premium price level, and I see rejection there, and I'll wait for the momentum to kind of start ramping up, and then I'll get back into that trade. I'm not going to allow it to sit there and kind of piddle around, and then it starts to come back against me. I'm not going to do that. That's how a lot of people get into situations where they're taking on major drawdown. So yes, for me, I get out the trade quick. I think that you will start to become fearful once you get into a trade, the market executes or fills your orders, and then it doesn't move in your direction quick enough, and then you sit in that trade and it's just moving stagnant, moving sideways, chopping around, and you allow it to come back. Yes, fear is going to set in then, because you're watching yourself lose money. And the thing is to get out quick enough, wait for the momentum to start kicking up and ramping up, and then get back in and follow the market, move with the market. Okay, that's what I do. Exactly what I do. But as far as fear, as far as the number of contracts, it has nothing to do with the number of contracts. Some people think that the more contracts they actually get into or start trading with, they become more fearful. If you're in a situation to where you are trading larger lot sizes and you're fearful of trading larger lot sizes, scale down. I mean, as simple as that. Why are you trading or leveraging more capital out of your account and trading larger lot sizes and you're not comfortable in doing so? You got to think about that. I mean, trading is logical. I mean, you got to think about it, but it's also psychological in a sense too. You have to be comfortable in all means and all around, and take logical entries when you get to the market, logical trades. But the psychological piece, it helps boost that confidence in a sense. If it doesn't seem right, it doesn't smell right, then don't get into the trade. You should have a feel for what the market is trying to accomplish and never really be fearful as far as the amount of contracts you're actually trying to trade. Doesn't make any sense, Once price taps into a premium price area and you're able to read and understand what the market is trying to accomplish, take the trade regardless of how many contracts you normally trade with. Trade with. It doesn't really matter, okay? And you got to be comfortable, whether it's 1 contract, 2 contracts, 3 contracts, 4 contracts, 20 contracts. It doesn't matter. You have to have the same level of confidence and not be fearful. Once you're in that trade and fear steps in, then get out. Why sit into a trade if you're going to allow yourself to be fearful? The market's not moving quick enough or isn't going to fill your orders quick enough. Get out the trade, all right? If you are fearful, then you shouldn't be trading at all. I'll say it just like that. Again, if you are fearful of trading, regardless if it's 1 contract, 2 contracts, 3 contracts, 4 contracts, 5 contracts, then don't trade. You're not ready, okay? Because fear is something that every trader deals with differently. You have to understand that, and it will never disappear, okay? It will, slowly start to diminish, to where, let's say you were at a fear level of 100% and now you're down to say 10%, whatever the case is. It's going to be there, but you have to be able to, like risk management, it's the same thing. You are managing the psychological components just as well. You're managing greed, you're managing fear. You have to be able to manage your up here. You have to be able to manage what's going on upstairs, So as a person, we are constantly battling ourselves as traders, okay? And the biggest thing that we have to overcome and accomplish and kind of defeat is the mind, because we want to make money, right? And so many people think that it's a quick and easy way to make money. Yes, it's a quick way to make money. I will say that, okay? And you can make good money, but it's not easy, okay? Because you strategically have to know strategically speaking, you have to know not just what's going on in the market, but how to tackle the market as well. All right, and the only way to be able to do that, the market is designed in a sense to where it is, it's not fail-proof or anything like that. It's designed to trap you. It's designed to stop traders out. It's designed to take your money. And there's only one way to move, and that is with the bigger players at hand. Okay, you have to understand how they move, when they move, where they move at, and get in, at those areas, those premium price points, understanding, their patterns, understanding and following the setups, okay? So there's traps all throughout, the market, and you have to be able to trade, like I said, again, with the big players, whatever the case is. I like to move in the direction of liquidity. Wherever there's resting liquidity at, I know that at some point, once price pulls back to a certain zone, or whatever the case is, whether it's demand or supply, I like to move in that direction of liquidity because it just seems, that's the area they're trying to accomplish. It may not happen immediately, but you have to wait and analyze market structure and follow price action and take the trades at the setups that you're looking for. And to me, it's moving in that area of liquidity where liquidity is resting in the market. That's pretty much all I have to say on that topic there. Hopefully that answers that question in some way or another. That's the best way that I know how to answer that question. All I can say is, fear is always going to be there, but it's just all about being able to manage that fear. And as you become more experienced as a trader, the fear piece will slowly start to diminish. And if you're fearful when you get into a trade and it's not moving quick enough in a direction to fill orders, whatever the case is, then get out of that trade and wait for the momentum to ramp up, to pick up, and then get back into the trade and look for the market to take profit at those areas, or take profit at those areas where you're looking to, wherever you have your profit targets at, whatever the case is. starts to come back against you, then get out the market. Eliminate, minimize your risk. All right. So that's all I have for you guys today. If you're interested in joining our Discord community, find the link down in the description portion of the video. We have a great following base, a great community of future traders on the channel, on the Discord channel, and we have two channels pretty much set up. There's the general chat channel and the trading floor channel. General chat channel is for general, question and answer and type things surrounding future trades or futures markets, and then the trading floor is specifically what it is. It is when the sessions are open, when the market is open, especially the U.S. session. And it doesn't just primarily have to be the U.S. session. You can trade the Asian session or even the London session. As long as you trade in future markets, and if the market is actually open, because we know the market is trading 24 hours a day, Monday through Friday, right? So it doesn't really matter the session. Just come and join us. I mean, it's a trading channel or a channel on the Discord community to where we share our trade entries, levels, and zones, our ideas and price points, and what price may be going to or may reject at. So we share, information on the trading floor. So come and join us if you're interested in doing so. Find the link down in the description portion of the video. And that's all I have to say today. I appreciate everyone that's tuned in. Have a wonderful weekend, and hopefully we can get ready to start ramping up. And next week is a new trading week, and hopefully every trader that trades is successful next week. But be mindful because we are in the actual holiday months, and the volume, of course, is lower than it typically is in other times in the year. And I wouldn't expect for it to really start picking back up, and probably until, of course, the beginning of January, sometime halfway, midpoint of January, whatever the case is. So I'm taking my trades, being a little bit light on the light side as far as the number of trades I take, and just looking for better setup, looking for the right opportunity setups at premium price points, back in those areas of supply and demand. Follow market structure, follow price action, okay? So outside of that, guys, I'm going to wrap it up here. Take care. I'll see you guys in the next video, and have a great one.